Well, joining me now to talk a little bit further about this is Philippe D'Arvisenet. He is the Global Chief Economist at BNP Paribas in Paris. Thank you very much for joining us. What do you think that these non-farm payrolls are likely to show?
Well, you have a convergence of indicators, the non-farm payrolls that you mentioned, which have been trending down recently. We have had the survey with the private sector that was released yesterday, very, very high, highest since the beginning of the series, I should say. The ISM showing that momentum is gathering. So at the end of the day, if you put these indicators together with the fact that the agreement between the Obama administration and the Republican is also putting some impetus in the economy and releasing some kind of uncertainty in the corporate sector, probably the willingness to hire will increase. And as of ourselves in BNP Paribas, we have released a pre-forecast of something in the province of 140K for this afternoon.
Now, the problem of structural unemployment doesn't look to be going away. Is that going to be a big issue for the US going forward?
Well, it is a serious issue. We have seen it already when the administration asked the Congress to agree on the extension of the long-term unemployment benefits last month. We also have seen the average length of the spell of unemployment, if you will, is higher than when it was at the top of a previous recession in the early 80s. And of course, it makes things difficult when somebody has been out of a job for 1 or 2 years. I mean, there is a drop in his skills, if you want, and the potential employer might hesitate to hire this sort of people, which makes really a challenge.
Now, is some kind of minor success in these non-farms payroll going to signal that QE2 has been justified?
Well, I don't think it has very much to do with that. I think at the end of the day, there is a recovery. At the beginning, you can produce more when using people who are still there. Comes a time you have to hire. That can go more or less fast depending on the level of uncertainty. As I said, most likely the agreement between the administration and the Congress regarding the coming years is eliminating some uncertainties regarding the tax treatment of corporates and this sort of thing on the one hand. On the second hand, it adds some impetus to the economy because the retrenchment in the public deficit, which was to take place this year, is postponed by 2 years. So that's a support. Well, the only thing one could say regarding QE is maybe long rates would be even higher than today without it, but we will never know.
Indeed. The criticism about QE2 really is coming from overseas, isn't it, in terms of the effect that it's having on the dollar?
Well, there is a kind of balance, if you will. The QE2 is really going towards dollar weakness because it is an invitation to invest in more risky assets, including outside in the emerging world, etc. So that's dollar negative. But you have a crisis in Euroland which sometimes rebalance the thing on the other side.
Okay. Mr. D'Arvisenet, thank you very much indeed for joining us.
Thank you.